Is the S&P 500 approaching a critical inflection point? Valuation metrics, including the cyclically adjusted price-to-earnings (CAPE) ratio and the Buffett Indicator, are currently hovering near historical highs. These elevated readings suggest that U.S. equities are trading at exceptionally rich valuations, increasing the likelihood of a valuation-driven correction. This raises a critical question: does the market's long-term technical structure support this view? An analysis of the S&P 500 since 1932 reveals that the index has spent approximately 95% of its time within an upward-sloping logarithmic regression channel, bounded by two standard deviations. This long-term structure mirrors a normal distribution, where most price action is contained within this range. The S&P 500 currently trades between +1 and +2 standard deviations, approximately 1.5 SD above its long-term trendline. Historically, the index occupies this elevated territory less than 15% of the time, underscoring how stretched current price levels are relative to long-term structural expectations. This deviation suggests accumulating corrective pressures. While mean reversion pressures build, momentum-driven bull markets can extend beyond fundamental fair value. The index could advance toward the upper boundary, +2 standard deviations, implying a potential upside target near 700. This represents an estimated 12% additional upside before a statistically anticipated adjustment phase. Based on nearly a century of structural trend analysis, the S&P 500 appears to be in the process of forming a cyclical top. This short-term peak could realistically materialize anywhere between current levels and the 700 thresholds, after which an adjustment phase would be statistically anticipated. Nevertheless, as long as the S&P 500 remains confined and advancing within this established logarithmic channel, the long-term upward structural trend remains intact.
That's all for today's update. Thanks for watching. Don't forget to like, subscribe, and hit the notification bell for more in-depth market analysis. See you next time.